What happens in Europe doesn't always stay in Europe, and that has American economists worried that problems with the euro across the Atlantic will off-balance the U.S.'s crawling economy.
People don't have that much confidence in governments, U.S., Europe, whatever, maintaining the value of their currency because they know there's the temptation with, the spending to monetize the debt and to have, some significant inflation.
Wall Street took its largest fall in nearly a year and a half on Thursday as more investors woke up on Friday to the possibility that Europe's debt crisis might spread around the world and hit the U.S. Europe has an economy now as big as the United States, and when it's in bad shape, it's hard for U.S. merchants to sell exports there. The fallout could eventually hit Americans where it hurts, in the wallet.
Yeah, I think some of it certainly is. The question is how much of it is going to be if we keep spending like we do and don't rein it in.
Turbulence in the European economy may be bad news for the global market, but not necessarily U.S. consumers. A floundering euro may mean lower gas prices, cheaper loans, and good news for U.S. investors.
Better, relatively speaking. You're still seeing, interest in commodities, interest in gold, in this country, interest in, in buying gold, hedging investment.
6 months ago, the value of the dollar was sinking fast, losing ground to the euro on a daily basis. There was speculation that U.S. currency would be replaced as the world's reserve currency, but those fears have subsided, at least for now.
The economy itself, from what you can see, is precarious enough that you probably don't want to do anything in terms of new spending and taxation.
Europe's debt crisis could eventually pose a threat to the U.S. and world economies as trade shrinks and banks incur losses on European investments. But then again, cheaper expenses for the American consumer may give the U.S. economy the boost it desperately needs. Colin Campbell, Washington.